Hi guys, this is Mark with my analysis for the week commencing the 21st of August. As ever, we start by looking around all different markets. Hopefully last week, if you continue to focus, as I have shown you, on the dollar index, it will have helped you to make some money either on Swissy or the CAD, which I did, and you can see that in a separate video. But we've been monitoring this, and as I said the other week, it looked as though it was trying to break the other week as the overreaction to the CPI, and I said wait for the weekly. Unless it clearly broke and closed below on a weekly, we are still thinking this is dollar positive. So that was the bias for the week again, and still is. Obviously, if we start getting up near a double top, then you would expect the dollar to start to hesitate at the very least. And if it turns down again, we would be watching here for a potential rebound back up. Now, last week, everything dropped. The Nasdaq, I've been saying about stocks, I sold all my stocks last week. I explained that in the live session as well. I think I explained it last Sunday or the week before. And I've been watching this longer term picture. Yes, the Nasdaq did break the 200 in the upper channel line, but I said to you, I'm not buying into this. There is no logical reason to me to support the theory of the US stock market moving higher. And for me, therefore, I was happy to do so. And again, I cover this in detail in Tuesday's live session. And as I was explaining, I had the courage of my convictions to be buying a lot of stocks at the bottoms, but I also had the courage of my conviction to get out at the top because it just didn't make any sense to me. S&P 500 has rejected at the upper channel line as well. This is not to say that this lot may still go on a silly run up, but if it does, I will be looking to short, and I will not be interested to buy at the current time. Eurozone stocks also dropped, and again I said this was potty. The Eurozone has been on the verge of collapse for a number of years. I've been telling you for 5 years that I think that it's structurally unbalanced and eventually will explode or implode, and I think we're getting nearer to that point now. And the UK stock market coming back up to recent highs. Again, that makes no sense whatsoever. The Bank of England have already said that they expect inflation to be at 13% by the end of the year, and that there will be a recession next year. Unlike the Federal Reserve, who have changed the rules and now say, oh, we're not actually in a recession because the definition's changed. Make of that what you will. This is Berkshire Hathaway. I was saying the other week, you could almost use this as a barometer of the US stock market as well. I sold my Apple the other week. I'd shown you previously a few months ago, I had originally bought some at 140 and I bought more at 130, and I got out here at 160. Now, to make 20% on one of the biggest stocks in the world in a couple of months, you would often expect to wait a year to make that or more. So I was happy to take the profit here, and it kept going. And I explained it didn't bother me in the slightest because this didn't make any sense to me. There's an issue that's still ongoing with chips, and Taiwan issue the other week when Pelosi insanely went and rattled the Chinese cage. And at the end of the day, if we go into a recession, how many people are still going to be willing to be spending $1,400 on a new phone? To me, it doesn't make sense. So I was out of that. I was also out of Amazon. This is where I got out of Amazon, and it kept going up a little bit. But again, I bought Amazon at 2,050, which when they did the share split was 101. And therefore I made 35% on Amazon in 2 months. Take what the market is willing to give you is the moral of the story, and that's for crypto, that's for Forex, that's for everything. And everything dropped the other day. Bitcoin was one of them. Chili's, this is an interesting crypto. I might buy a bit of this on Monday, or you can with crypto buy at any point, but there's a reason fundamentally for this one. And then Ethereum, I showed you in advance, I explained I was buying at 1,050 the other week. I still hold Ethereum in my portfolio, but this was a trade, and I took the profit out in here. And as I explained, it was a 60% profit in a couple of months. So that for me was fine. It kept going. And at that point you think, well, it could be on for a run. And fundamentally, there are things going on at the moment with Ethereum. It might go on a bit of a run, but now it's pulled back. I would wait. If it drops back down again, then I would be interested. So I'd say I got out of everything else. I sold my Shopify. I sold the lot. I cost averaged my way out heavily at the bottom here. And I even closed out my Zoom as well. It's going nowhere. I've had enough. Microsoft was the one that did break its channel. I looked at it was going higher, and again, I wasn't even into Microsoft. This was the shares I was in. So I sold Apple, sold Amazon. I am looking to buy more gold and silver miners at the moment. I have orders in. I've explained before, I do own the physical metal as well as, and I've shown you the levels I was buying at, one of which was 19 and another is 18. And if we go into free fall on gold and silver, I will buy more, but I also am using mining stocks as a means of leveraging in a way. And this is one of which, this is First Majestic Silver. I do like this one. And I have levels in here where I have an alarm set at 675, and I'm also would be interested in buying if we get down to 5. And I showed you on Tuesday, have a look for anything, not financial advice, but for me, for anything that I'm interested in buying now in the stock markets and things, is that the actual absolute stink level is if we hit the COVID lows. And then I would definitely be in. So that's why I've got that on here. And I'm doing exactly the same thing with stocks. Other than that, I'm showing you PayPal. I'm still, actually, this is the only one I am still in. This is RIG. And this is, they own the oil rigs that the oil companies need to hire to get oil. So I've got that one. And actually, I have a bit of Rolls Royce left as well in the UK. Other than that, I'm out. Don't regret it. Not going to rush into anything at the moment. This could well turn into a bloodbath. On to the subject of Forex. And I say, I live in the Eurozone, and also I am English, so I am aware of the British economy as well as the Eurozone. And I've been telling you for years and explaining Germany has benefited the most out of the Euro because the PIGS countries, Portugal, Italy, Greece and Spain, their economies have dragged down the value of the euro, which has meant that in effect Germany's been selling its Porsches and its Audis and BMWs and all the engineering that they sell around the world, the quality goods, at a discount. And as a result of which they have been able to bail out the PIGS countries. Well, now that Germany's in a mess, and we're talking a serious mess, and it's not just the Ukrainian situation. They almost went into recession before COVID, so this has been going on for a while. But I said on Tuesday I expected the euro to retest 1-for-1 parity, and it almost did that on Friday. Of late, we're having to pay attention to yellow flag news as well as red and orange, and I've explained that what you have to keep your eye on, you're looking for a drip of positive or negative news to support the theory that a currency is about to change direction or is going to continue, in the case of the euro, to drop, and the pound as well. But this is why you have to learn to look behind the news a little bit, because you could have seen this on Tuesday, and Forex Factory said this is a positive. The average earnings in the UK over the last 3 months are up 5.1% as opposed to 4.5 anticipated, and 6.4 was revised upwards last time. So you might think, well, okay, that's a positive. But on the other hand, as I just mentioned, the Bank of England have forecast that the inflation rate will be at 13% by the end of this year, and the UK will be in full-blown recession next year. Then clearly the discrepancy between the increase in earnings and the inflation is much worse. Same situation in the US. So that was that bit of data. But then the biggie at the end of the week on Friday was the German PPI. And this is the inflation that the producers are accounting for and explaining what's going on. So, okay, 5.3% on the surface. If you didn't know too much about it, well, Forex Factory still sees that as positive, but it doesn't look that bad. But the important thing, the record jump in German producer prices adds to gloomy look, as they say here. And the price of goods is up. Energy prices are up 105%. Producer prices, regarding as a leading indicator for inflation, saw their highest jumps on record. I think that goes back to 1948. And as we've just seen, energy prices up as well. Energy prices for families are going to go up as well, although the government are going to reduce some taxes to kind of try to offset that. But the bottom line is that there is no positive news coming out of the Eurozone at the moment. So we expect to see continued euro weakness. Big event of this week coming up is Jackson Hole. Jackson Hole is organised by the Wyoming Kansas City Federal Bank. It's in Wyoming, and all the top head honchos from central banks around the world are either there or virtually. And this lot between them will get their heads together and decide what's going to happen next. And on the one hand, you expect the euro to tumble through 1-to-1 parity, but the Eurozone don't want that, and equally the Americans don't want that either. They don't want the euro to get too weak. So expect some shenanigans from that one. Anyway, for the week ahead, the big event news-wise, what you have to look for on Tuesday, there's a swathe of flash services PMI. Again, if you're not sure what any of this means, click on the little box and it explains in here what it means. But there's a load of them, and ironically in here, anything above 50 is seen as positive and expansionary, and already you have the Eurozone and Germany into negative, so that is forecasting recession rather than expansion. And then you've got the UK and the US this week. At the moment they're still 51, 52, so they're still seen as positive for their economies. If these drop below 50, that could set the pound tumbling, but then again that could set the dollar tumbling. And then further down you've got GDP quarter on quarter for the US, a big important figure. And then, as I said earlier, you've got this Jackson Hole going on. I don't trade Friday, so none of this is relevant for me. Powell speaks Friday. That could cause some ructions in the dollar. So if you do choose to trade Friday, I wouldn't be trading whilst he's speaking. Okay, on to the charts now. As I said earlier, US index, I explained the other week, this looked as though it was going to break. And I said to you, don't be thinking that the dollar is suddenly changing direction. The only way I would have used this to give me some confidence to start shorting the dollar was had it closed here or lower and clearly closed below. It spiked through, and at the end of the week, as it often does, it then turned and promptly went the other way. But that was a clue about dollar strength, which we've shown in recent weeks. You can use that knowledge to help you to get into trades in the Swissy and in the CAD. And you also use it to confirm the bias that we want to short the euro, the pound, the Aussie and the New Zealand dollar. Natural gas is moving higher again, and that is in the summer months. And again, that is going to impact on inflation, particularly in the UK and the Eurozone. Oil drifted a little lower. It's holding at the moment. Here would be a key level for oil. If it broke 82.80, we might be on for a run down. If that happens, I will be buying oil stocks. At the moment, they're just too expensive. But if that was to happen, at the end of the day, the world still needs oil. And until or unless Russia settles, and even then, folks are not going to rush back to buy their oil in the short term, that would be important. So for now, keep your eye on this. Gold, just shown you, coming back down. This was the level I was showing you the other week. I explained this for months. I will buy more in here, physical and mining stocks. And then silver, the same thing. It's sat on the 200 EMA at the moment. And previously I had a line in here also around 18, I think it was as well. So anywhere in here, there is a shortage of physical metal. JP Morgan have just got done yet again. This time they got done for racketeering in what they've been doing in the silver market. And yet Jamie Dimon carries on, lots of positive publicity. None of the top man going to fall on his sword going on at JP Morgan. Here you go, 19, anywhere down here I will be buying more. So back to the dollar Swissy. The dollar index bounced here and the dollar bounced up against the Swissy, and here I would expect price to struggle. If it breaks and closes through here, then I would be interested to long it. But remember, the dollar index is coming up to a double top, so this may well be the area where this drops again. So if you're still in this, be taking profits before it gets here. I would be a buyer again back down at 95 and 94.70. USD CAD, I did take this last week, see the separate video. I actually caught this a bit late. That was obviously the sweet spot again, and as it was, it went up to the 130. Remember, I say to you all the time, 130 is a massive area of support and resistance. It goes back 20 years, and what did it do? It stopped to the pip this week at 130. So had you bought in here, you should have been out all of it up here. I took it on a smaller time frame, and I got in, if you see the video, I actually got in on a 1 hour, which I don't normally do, but I was around as it was making the move. I think it was in here, but check out the video. This was my target, and I only got 70 odd pips out of this, but at the end of the day, better than a poke in the eye with a sharp stick, as they say. Aussie dollar, this was frustrating. I said last week I was wanting to short this up here at the open. I missed it by a handful of pips and the damn thing went 270. I would be interested if we can get back to 70 for a potential short, and definitely back up here at 71. Euro USD, it's coming back down to parity. Last time it spiked through and tried to break it. What I was explaining to you last time, the market makers are waiting here. They know that people are going to put orders in here to buy off the bounce. So it is a very risky period of time. I would be far more interested to short this anywhere 103, where we now start to have multiple reasons for the stop. Trend line, 55 EMA, previous support and resistance. There's a lot going on there. And I wouldn't take it here either, because the probability is 50-50 as to whether this is going to rebound or keep going, and it's too far away from everything for a stop. British pound, same scenario, back down here where it was a few weeks ago. Again, it's miles away from anything in terms of a stop. It could well just bounce here. I don't counter trend long in these situations, and I'm not going to short. Euro pound is trapped still between this 200 and 55 EMA on mine. I want this to either break and close above here and then pull back for a long above 85. Wouldn't make any sense to me fundamentally, but you never know. Short wise, it's messy. There are better opportunities elsewhere. One of which is the Euro Aussie. Now it is quite a way away, although folks will say that to me week before. I said, look, it's miles away down here. Why is he picking this area? It's 400 pips away. Well, actually, it got to within 60 pips of my area. And I am quite content, as you know, to wait. I did it last time here, and this one in the end went 400 pips. I've done it numerous times over the years. We were longing this previously, and here we had to wait 2 or 3 weeks for it to come back down. But on a long, it was then gave 500 pips. So for me, I still want to short here at 147.70 now on this pair. New Zealand dollar, similar scenario to everything else. It's too far away at the moment. Best place for me would be all the way back up at 65.50, and intraday of interest will be 64.50. Aussie New Zealand did it again last week. This was one of my private clients clicked this area. That's the place to be thinking about potential longs. And then in terms of a stop, 30 odd pips, and you might be on for a 1 to 5 risk reward on this pair. Pound Aussie, too far out of the way, no support resistance for the stop. Euro CAD, a lot more interesting. We're looking at 60-70 pip stop for a potential 700 pip gain. So that's a 1 to 10 risk reward ratio. It's not going to get up there this week though, is it, Mark? Well, probably not, but I will wait. On the interim, if it gets to 133.70, that is one to watch on a daily. Euro New Zealand, similar to ones I've just shown you, still waiting for a pullback. And I have the order set here at 164.70, 70-80 pip stop, but a potential 600 pip gain. Pound CAD, too far away, need a big pullback. Aussie CAD, again, same setup as lots of the others. Now here, I would split this order now. I would have half at 90.90 and half at 91.20. Pound New Zealand needs a bigger pullback. Pound yen I hate with a vengeance. Anywhere in here, 160 would be the area to think about, but not for me. And CAD Swissy, somebody asked me to look at, no. I mean, it's trapped in the 30 pip range. Why would you want to go near that one? And final one, Aussie Swissy. Again, up here, you're looking at a 60 pip stop, potential 160, 200 pip gain. That's the sweet spot. That's the one that I'm most interested in on that one. Okay, have a great week. Catch you later.